Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Coinbase, ticker symbol COIN. And I will also be going over Robinhood, ticker symbol HOOD. And so my analysis for both of these is pretty similar, so I think it should be helpful for you, either stock that you're in, and also whether you're a bear or a bull. I do think that this video should be helpful for you, and it is partitioned into chapters down below. So if you're interested in one over the other, you should be able to skip ahead to that one. But I am going to start with Robinhood because, I started looking into this one first and had noticed this uptrending level of support, this red line here, based on touch points going back to the middle of June 2022, as well as the end of December 2022, which looks like around earnings, I believe. Price did break below that, which was short-lived, and then there was a rally up. So I do think that this level is pretty significant. Also, forgot to mention there was this touch point here, May 2023. And so, yeah, I do think that's a pretty important level to be paying attention to. And so considering what's been going on with the chart here, most recently, when we did break above this level, the red line here, that was around a price of $9, marked by this yellow line. And on the way up, we did create a gap that is going down to a price of $8.65 to fill that. And there's also this other lower gap, which has older history, and that would be filling that at a price of $7.22. But it's quite possible those gaps will not be filled ever, but just wanted to point them out. But just looking at the chart here from the recent price action, it is pretty ugly, but I do feel like a head and shoulders pattern was created here, a couple touch points here from, let's see, December 8th and December 13th. Those two lows make this neckline. And so from that, we can take a measurement to get a measured move to see how low this might go. And so taking that looks like it's down move of around $2. And if we take that to where it broke the neckline, that would suggest a retracement to around $9.67, give or take. Also, do want to point out that these two gaps, actually just one of them was filled. Let's see, actually both of them just today on the day that I'm recording this, January 17th, both of these gaps were filled. So it is quite possible that it could be consolidating here, especially if we look at the volume profile, it doesn't look like there's too much support where it's at, maybe a little bit, but based on current price action, most recent price action, price could be going lower. And I think something to help us in understanding where price might go to would be a Fibonacci retracement taken from the low here on November 16th up to the high on December 27th. And it does look like the 50% retracement is right around current price, $10.60, recording this during market hours, so it might be changing a little bit. But, I do think that price could go lower, like to the 618, around $10 psychological level. That makes sense. Or possibly going down to the 786, which is right around $9. And that would coincide with the break above this red uptrending level of resistance that had acted as prior support, might be acting as support again. So I do think that it is good to prepare for further downside. However, we might be getting some consolidation. So I do think that is good to consider moving forward. So now I'm just going to switch over to Coinbase. We could see these three levels that I have marked, one at $1.32, current price as I'm recording this during market hours on January 17th, right around that level. So that could be acting as support. But if price does go lower, it looks like 111 has served as resistance in the past, so that could be notable support. Also, when you look at the volume profile, it doesn't look like there's a huge volume shelf there, so price could go lower, perhaps down to this gap at around $80, $79. I do also see this red line here at $85 that could act as support, but looking at this volume shelf down here, it's quite possible price could go much lower. However, I don't think it's going to be going that low, and I'll explain that in just a second, which is really just, like the other chart, the Robinhood chart, based on a Fibonacci retracement and a measured move, as it looks like we do have this kind of ugly head and shoulders pattern here, having broken the neckline. And so if we take a measurement from the top down to the neckline, that represents about a $43 move. We take that to the where it broke the neckline, and that looks like price would be going down to around $112 based on that measured move, which is pretty similar to this orange line level of support that I have marked here. So I do think that is a level that price could be returning to. So I think it's good to prepare for that. And then if we do Fibonacci retracement from the bottom here, that was on, let's see, October 27th, going up to the high on December 28th. See, pretty similar to the Robinhood chart. It does look like 50% retracement, pretty similar to the current prices that we're seeing now. But again, we could be dropping lower to like the 618, which would be around $115, or potentially the 786, which would be around $95, $96. And if we look at the volume profile, it does look like we are actually breaking below a good amount of consolidations that will act as resistance. And it doesn't look like we get much trading picking up until down around $92, $93. And so that could coincide with a 786 retracement. So, those are my thoughts on Robinhood and Coin. If you found this helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.